Here we go. Back in action, stocks at the numbers, and we had a couple of names reporting earnings today after market close. One that I know a lot of you were watching, one that I was watching as well, but let's get into it. So first up, Palantir Technologies, ticker symbol PLTR, listed here on the New York stock recently. I believe it was back in September, got added to the S&P. It's basically been on the up and up since then. People were curious about how these earnings were going to come out, and boom, the company does not disappoint. They come in with a pretty healthy EPS beat here, posting 10 cents a share. Estimates were 9.1 cents a share, so they beat that by just about 1 penny, or roughly 10.33%. The revenue comes in pretty healthy as well, 725.5 million. Estimates were 705.1 million, so they beat that by a little over 20 million, or a touch below 3%. Practically all segments are up. They increase guidance moving forward. And again, I'm not necessarily bashing the company, because I've spoken about in the past how these stocks have that snowball upwards effect when we have the consistency of the earnings coming out. And Palantir, again, as much as I dislike the current valuation, I will admit the earnings have been pretty solid. We spoke about it practically every quarter, but I know Wall Street is really keeping an eye on that commercial segment revenue, because they felt that that was going to be the issue, not necessarily the government revenue. And apparently that consistently keeps beating the mark, and they keep beefing up their guidance and their revenue and their earnings moving forward. So I guess you do have to reward the winners in the market, but you can see right here the stock closed 41.41, down about half a point, 1.2% going into earnings, and now you can see an absolute explosion. This is technically all-time highs right here, even with the stock at 46.80. Right out of the gate, I believe it shot up to 45. 45. That was back end of January of 21. Then obviously the stock went into that long-term descending wedge we spoke about, had a premature breakout, but the company posted, EPS positivity and was on the up and up since then. And then of course, again, the S&P inclusion, so that of course helped them out. But yeah, my main concern is the current valuation, only because now we're talking about a market cap north of 100 billion. As you can see, the PE's up here at, now it's 250, 260. And they did increase guidance, but they're looking for full year revenue of about 2.8 billion in change. So again, of course, depending on how you look at the situation, you can either say it's going to keep going or it's due for a big pullback. My main concern with situations like this, again, I'm not saying that I don't understand why the stock is up. I get it. But also at the same time, again, 2.8 billion in revenue, $100 billion market cap now. And I just want to remind everyone that markets are up, 45, 50% just over the last couple of years. And this stock in particular is up pretty massive over the last 12 months as well. The markets haven't stopped running for essentially the last 12 months. If we pull out a 1-year chart, I mean, this was when we called the sell-off and we had the big drop down. And then this time last year, you can see, like right after Halloween, that's when we went on the up and up. And you can see that the Dow was down here at the low 32,000s, and we recently ran up to, almost 43,500. So the markets are up roughly 33% in value over the last 12 months, essentially straight. These little pullbacks and lull periods that lasted really only like 2 weeks before the market popped up and took that next leg higher. I mean, I really don't personally consider those as big pullbacks or big corrections. But again, just something to keep in mind, because I even tweeted this before, that looking at Palantir's current valuation, again, the numbers do have some sort of weighted value on these stocks. And I know it doesn't always look like that, but again, with the rate at which the markets went up and how much we're up in the last couple of years, regardless of how we feel about elections, whether Trump wins or Harris wins, if the market's waiting for elections to then potentially do that 10, 15% correction that even a lot of analysts on Wall Street were expecting, not just myself, then I just want to put it out there that something like Palantir, this thing could drop like 40, 50% in value and it would be justified. So I'm not necessarily, advocating that, adding to a position or averaging up here may be a bad idea in the long run of things. But again, if markets do begin to sell off and this stock goes from 46 down to 26, you can't really be too upset. So that's basically what I tweeted out. It technically was a strong quarter, but in my opinion, you should just, stay sharp, stay on top of it, because again, if markets do reverse, this could get ugly for Palantir. But I'm sure a lot of you are seeing the growth, so even if the stock did pull back from 46 down to 26, you'd probably view that as a buying opportunity. So I can appreciate that as well. But looking at the numbers here again, there's really not much to complain about other than the current market capitalization, in my opinion. That's really the only red flag I personally have with this company, because the numbers have been pretty rock solid here. As you see, 30% increase in revenue over the same period a year ago. Absolutely staggering. Beating estimates, shares jumped. Analysts say growth in Palantir's commercial business and government contracts are critical to justify its lofty and rising stock price. So that's what I mean. They basically know what I just said. And what they're saying is kind of in the same defense of Nvidia, when Nvidia just kept going up and up and up. There were a lot of people who were saying, well, wait a minute, the company did whatever, 30, 40 billion in revenue last year. And at the time it broke like $1 trillion market cap. So there were a couple of people on Wall Street who were saying like, they better keep it up, because if any bad news comes out, the stock's going to crater. And that's basically what they're saying here with Palantir as well. So you may continue to see bumps, and it may continue to be on the up and up for who knows how many more quarters. But if a quarter does come in light, if they mention that for some reason margins went down, capital expenditures were more than previously anticipated, right? Any negative like that, in my opinion, you're going to see a big chunk down in Palantir stock. So, technically here, follow the trends, of course, ride the wave, but just throwing it out there, stay sharp. You have to keep an eye on something like this. But Palantir's share price has more than doubled since the start of the year. Sure, why not? And has risen dramatically since the spring. In addition to the S&P, its addition to the S&P 500 in late September helped catapult the stock about 13%. But we saw that you always see that with every name that got added. Again, something like SMCI, which I can try to do an update again today in a few minutes here, if you bear with me, because I know that they hit new lows. So I'm sure a lot of people were keeping an eye on it. Maybe some people bought it. Maybe some people sold it today on the drop. So I wanted to take a quick look at that as well. But in general, Palantir, Dell, SMCI, right? When we got news of these companies being added to the S&P, they all rose. So we kind of know how that works. But Palantir sells data analytics. I'm going to go with data this time. Data analytics software to governments and businesses worldwide. Last year, it launched its artificial intelligence platform, of course, which it sells through so-called, quote, boot camps to introduce business customers to the technology and solicit more commercial business. Apparently, it's working. Palantir's technology has been used in the wars in Ukraine and the Middle East to assist with battlefield logistics and military decision-making. So I guess it's just the right place and the right time, because not to talk too much about politics, but again, a lot of people were saying we may not have had these issues come up in Ukraine and in the Middle East if we had a different administration. So the fact that all of these wars basically popped off and everyone started to tap Palantir for their technology really just worked out beautifully, again, for Palantir. And of course, the numbers have been on the up and up over the last couple of years, and they qualified for the S&P inclusion. So it's really been just the right place, the right time for Palantir, which, again, not necessarily saying that the business is going to start to shrink if we happen to get Trump back in, but you may see a little stagnation, right? Because if there's more peacetime and less wars going on, less people may have to tap a company like Palantir. So, again, something like that, I mean, even if hypothetically both of those conflicts come to peace over the next couple of months, it's not necessarily a guarantee that Palantir will take a business hit in the numbers, so to speak. So something like that, again, just a random prediction, but something to keep in mind that we may start to see light numbers. But again, if analysts keep pumping up these estimates from quarter over quarter and Palantir keeps delivering as they have been, then, any geopolitical issues really aren't going to affect the company's growth, in my opinion. Palantir's third quarter profit was $149 million, its eighth consecutive quarter of profit and the largest so far. Fantastic. The company said it expected to turn a profit each quarter this year, and it has so far done so. Palantir's 30% revenue growth for the quarter exceeds growth for the prior 5 quarters, the company said, although that still trails its quarterly growth of roughly 50% from 20 to 21. Yeah, well, it was just getting started, though. It was just, right? So when you go, from 200 to 300 million, that's a 50% increase. And then, when you go from 650 million to 750 million, right? That's 100 million on 600 million. So what's that? Like 15%, 17% or something like that, right? So it's still impressive growth, but because it's a larger number, it's going to be a smaller percentage chunk up. So a statement like that, really has no bearing, in my opinion. There's this. Again, you still saw 30% revenue growth. It's phenomenal. So, I don't know where that little statement came from, but I digress. Palantir earned $179 million in revenue from U.S. commercial customers, which again they said is the one segment that they're keeping the biggest eye on, marking an increase of 54% from a year earlier. So basically, I would say all concerns about the Palantir business itself that these analysts have are kind of swept under the rug here, because that they really do continue to keep delivering. Palantir posted $320 million in U.S. government revenue for the quarter, an increase of 40% from the year prior. So again, my main concern is you may start to see some stagnation or potentially declines over the next year or two if these wars are concluded, if you will. Company said its commercial customer, and again, I'm not necessarily just going after Palantir here. We're looking at their earnings, but again, all of the other defense companies, like I've spoken highly about Raytheon, right? RTX, that stock has been on the up and up. LMT, that's what I mean. These are the sectors and the companies that are benefiting from this turmoil. So now you have to, take a step back and think, well, wait a minute. If we happen to now settle everything that's going on, this whole sector may start to see a sell-off. So again, I'm talking about all of the companies as well, not just Palantir. The company said its commercial customer count grew 39% from the prior year. So that's why this is relevant as well. Because if they do happen, hypothetically, to see peace overseas, and now they start to get less money coming in from the government, then if the commercial segment is remaining healthy and can offset any potential drop in the government revenue, then the company's still going to be looking like a shiny new penny, right? So that's why right now, it really might not be an issue, even if they lose that government revenue here, the more I read about it. But again, in general, raises its full year guidance, which of course is a big green flag, between 2.805 and 2.809 billion. It raised its full year guidance for U.S. commercial customer revenue to in excess of $687 million. And they used to bring in less than that a quarter. Oh, right, full year guidance. Yeah, my apologies. But still, 2.8 billion, right? And now we're going to be looking at 103, 105 billion dollar market cap company. So that's really the main thing I want you guys to keep in mind. And as I said, some of these overvalued stocks in the numbers, those are the most dangerous ones if the market begins to sell off. Because as I said, this stock can easily drop 40, 50%, and you can't get upset because it ran so much so quick. But in general, I mean, these results are really phenomenal. EPS, revenue climbed 30%. Quote, "It is the speed with which institutions in the U.S. in particular have adopted our platforms and artificial intelligence capabilities more broadly that has been, and we believe will continue to be, the driver of our growth." So it all sounds beautiful. U.S. revenues advanced 44% to almost $500 million, driven by a 54% jump in commercial. For 24, right? Yep. Okay, it was 2.74 billion to 2.75 billion. Now we're above 2.8 billion. So that's what, roughly 50 million. Okay. I mean, increasing the guidance in general is good. Market projections point to 276 billion. Okay, so we have a very good chance, it sounds like, to come in above this full year estimate. The company increased guidance for adjusted income from operations to the range of 1.054 billion to 1.058 billion, from 966 to 974 million. Very nice. Very nice. Palantir expects fourth quarter revenue of 767 to 771 million, compared with the street's 744 million estimate. So the wins seem like they will continue 3 months from now. The company projects adjusted income from operations of 298 million to 302 million, compared with the third quarter's 275.5 million. So all of these numbers really are on the up and up. So again, unless you're strictly looking at the revenue to market cap comparison or maybe the overextended PE, in my eyes, those are really the only obstacles and issues that you can mention surrounding Palantir. Because again, we like the numbers, and technically in the numbers, I mean, we're consistently seeing growing revenue, growing profitability. Everything is on the up and up. Next quarter guidance, full year guidance. So I know I said puts, but again, we were jumping to the 700 million mark. And I know it was on the up and up. I even tweeted out that, Palantir probably has a good chance to beat estimates. But I felt, again, like I've been saying, is that it's just a little overvalued. And it also recently got an extra bump after the S&P inclusion, right? So that's why, again, I was expecting, even if it was a good quarter, I was expecting a little bit of a sell-off, and then it could hang out and probably just continue to slowly climb up to these levels. But obviously Wall Street had different plans and immediately shot the stock up to new highs. But again, you guys know, I do always like to be 100% correct, but we know it's basically impossible. And at the end of the day, it's about growing the account, increasing the buying power, increasing the value of your portfolio. So all of you who still have Palantir, you're still bullish on it, listen, congratulations. You know I'm happy for you guys. I hope everyone makes money. But at the close, we can see that, we can see that the RSI pulled back middle of the road. And again, now the stock's up here, 46.5. So we're well above these top Bollinger Bands now. And could potentially go even to that psychological breakpoint of 50. Who knows? Who knows? But see, again, healthily, a pullback here to 38, in my opinion, would have kept it healthy. But I just think that you all are very pumped about it. So the eyes are always on it. It usually always sees an earnings bump. Consistently has volume coming into it. Whether you guys are adding, whether it's new volume in general, taking new positions. So people keep buying Palantir. So unless markets pull back, chances are from this point, it's probably not going to come back and retest the 50-day moving average anytime soon. But again, we know after elections, anything can happen. On the longer term time frame, we can see the RSI was overextended for a while, even though people try to tell me it's all about RSI, but it doesn't pertain to Palantir. But we can see RSI slightly pulled back below the benchmark of 68.4. Now I'm sure it's well over 70. Top Bollinger Band on the weekly, 46.91. Stock went up to 47.75. Where is this stop? 47.38. But does technically look like a big bull flag. So that's why I'm saying we could, quiet down here and then pop up and start running to 48.49. So that's why I'm saying the psychological breakpoint of 50 may be hit sometime soon. But technically 46.5. So technically we pulled back below this top weekly Bollinger Band. So that's why we might open big and then slightly start pulling back, because the RSI on the daily and now on the weekly is probably going to be overextended above that 70 benchmark. So it may, again, open up here and then kind of slowly start to sell off and pull back, come back down to earth. But it seems like anytime there is any slight dip in price or any slight dip in RSI, that's when the stock immediately bounces and takes that next leg higher. So the traders are playing the slight pullbacks, and I give them credit, because it really seems like anytime this pulled back, if you stepped in and bought some calls, you made out like a bandit. So any of you guys who are, trading it that way, again, congratulations. I'm happy for you guys. I really am. Whether I agree with it or not. I'm always straight up with everybody. But let's check the pivot points real quick, and we'll move on to HIMS and HERS that also reported earnings. So we can see, yeah, we're technically in uncharted waters here in all-time highs. We have no top-line resistance level here, so that's why I'm saying we may continue to go up to 50. Who knows? And we can see on the daily, the top line resistance, second level, is 50.01. So 45.78, we're at 46.41, so we're above the daily first level resistance, and that's why I'm saying 50 probably incoming. If it doesn't happen immediately, it'll probably happen over the next week or two, in my opinion. But let's look at HIMS. Because HIMS, see, the one thing I like about HIMS, again, the difference is, something like Palantir has good numbers. We know this, right? And something like HIMS has good numbers as well. But the difference is that HIMS has not exploded in value and has consistently been on the up and up. So that's why it's not that I'm bashing a company like Palantir. You guys just know as well as I do that I always used to talk about pricing and timing. And that's why me personally, something like Palantir, I of course would prefer to own it in the 20s as opposed to up in the 40s. So if there is a big market pullback, and if I did at the time have some cash on hand, then that would be something I would consider buying on a big sell-off. Something like HIMS and HERS, though, has more upside potential. And that's why I'll say again, sometimes I get these trending stocks incorrect. But if you look at the actual growers in fundamentals that I said I liked, Rolls-Royce, SB, Soundhound, PM, right? IBM even, I said, undervalued in the numbers, going to start seeing the up and up. That's what I mean. More times than not, those are the ones that we have more confidence in, more conviction in, moving forward on that growth, right? But I don't even know where that came from. Let's look at earnings. So HIMS annihilated these estimates. And I know you think I'm, might be blowing the stock. For the record, I do not have a position in HIMS and HERS. I own no shares. I didn't buy calls going into earnings or anything like that. So EPS comes out, annihilates estimates. Because I even tweeted this out as well. HIMS, we're seeing a bump up in revenue, right? Because the previous quarter, look at this, EPS still on the up and up, and it went from, estimates were 4 last quarter, they posted 6 cents a share, then we jump up to 10 cents. So I was like, I don't know, are they going to be able to do 10 cents? Apparently they were wildly profitable this quarter. But also, revenue here, as you see, recently jumped up from the high 200 million mark to the low 300 million mark. And then the estimates come in at the high 300 million mark. So it seemed like it was a high expectation, right? So that's why I tweeted out, anything can happen. HIMS earnings could technically be a toss-up, in my opinion. If I had liquidity, I'd probably roll the dice with some calls. But I said, in general, even if the stock pops or drops, I personally like it for the long term in the numbers. But we can see that they came in not only above this high 300 million mark, but they posted over 400 million in revenue for the quarter. 401.556 million. Estimates were 382.197 million. So they beat those estimates by about 19.3 million, or roughly 5%, which is a pretty healthy beat on the percentage side, not only in EPS, but in the revenue as well. So HIMS on the up and up, revenue steadily increasing, profit margins going along with it. Stock, as we see, closed 2076, up 40 cents, or roughly 2% going into these earnings. And now we can see after hours stock right now, about 21 3/4, up roughly a point, or another 5% in change right now. But if we look, I believe they also maybe raised guidance. Hold on, let me see. Here's a look. Reported, yep, okay, quarterly revenue. And is an increase over sales of 226.7 million from the same period last year. This is what, 80%? 80-90% increase year over year. Amazing. Subscribers reached 2 million in the quarter, up 44% year over year. Gross margin was 79% for the third quarter of 24 compared to 83% for the third quarter of 23. In my opinion, that means nothing. Net income was 75.6 million for the third quarter of 24, which included a 60.8 million tax benefit related to the release of a tax valuation allowance. There you go. So that's what helped the profitability, partially offset by current period tax expense. This compared to a net loss of 7.6 million for the third quarter of 23. But again, even if we subtract this tax benefit, we'd still be at, 15 million and change, which is a big jump from losing 7.5 million roughly. So that's why really, again, we're seeing up and up numbers very similar to Palantir. The difference is HIMS has not mooned yet, so to speak. So in my opinion, there is still much more value to be attained here in HIMS. Quote, improving momentum in both HIMS and HERS brands delivered another strong quarter of growth and profitability. Our execution against a strategy that brings customers convenient, transparent, and affordable access to care designed specifically for them is allowing us to reach millions of individuals across the country. HIMS and HERS sees fourth quarter revenue of between 465 million and 470 million. Wow, these numbers are really chunking up over the last couple of quarters. And raised its fiscal 24 revenue guidance. Hold on, I'm sorry, too much coffee. Raised its fiscal 2024 revenue guidance to a range of 1.46 billion to 1.465 billion versus the 1.396 billion estimate. So they also just raised their guidance by, looks like 50 to 70 million, which of course, because it's a lower amount, is more impressive than roughly the 50 million I feel that Palantir just raised their estimates. But again, I know it's unfair to compare these two companies because they're in, vastly different sectors. But you understand my point. I mean, look, Palantir again raised guidance to 2.8 billion, which is about double what HIMS is projecting. Their market cap's 100 plus billion. So that's why, is every stock you like an exception to the rule? You understand my point? So again, I'm not bashing Palantir, even though it definitely probably sounds that way. But also, if HIMS and HERS is doing half the amount of revenue for the year, then that should be like half the amount of valuation of Palantir, right? So what? So this is a $40 billion, $50 billion stock? In my opinion, it's not. But off of some people's logic, it might be. But in general, guidance increased. Shares are up after hours. Yep. Swings to Q3 profit. Boosted by a tax benefit. Weight loss drugs. Telehealth. Net income. Benefit related to the release of a tax valuation allowance. But again, minus that 60 from the 76, and we still brought in about 15 million in change. Revenue surged 77%. There you go. What I say, 80%, 77%. Again, I do those percentages, just quick off the top of my head. I don't crunch the numbers on the calculator before I make the video. Analysts polled by FactSet were expecting 382. Yeah, it was a really good beat. San Francisco-based company now has more than 2 million subs, up from 1.4 million at the end of the year-ago quarter. Average monthly online revenue per subscriber, right? We spoke about this recently with Fubo and Roku. Revenue per sub rose to $67 from $54. So apparently catering to almost every individual is working off for HIMS and HERS, which again, not to go off on a tangent of something else that I like, but Fubo, again, we spoke about recently of the customized plans and packages, right? So it seems like this may be a new trend where it's not just, pay us for what we offer and, you got to take the good with the bad and what you don't want with what you do want. Now it seems like a lot of these companies are just like, okay, why don't you just tell me specifically what you want, what you need, and there you go, you pay for that. So, again, that is different because this is, healthcare, and Fubo, of course, is sports streaming, but you understand my point. CFO said subscriber growth, excluding contributions from the company's weight loss solutions, increased 40% from last year on improved brand awareness and broader personalization initiatives. Quote, our new weight loss offering is helping a growing number of people and providing an accelerant to what was already a robust trajectory. For the fourth quarter revenue, 420 roughly. That's we're coming in 40-50 million above that estimate. These are big numbers here. For the year, and again, I'm only saying they're big numbers because the market cap is dwarfed, in my opinion. For the year, the company expects revenue between up from prior projection for between 137 and 1.4. Analysts were expecting 1.4. So we are on the up and up here. with HIMS. Anything here that I'm missing in the 10Q? Look at that gross profit. Up huge. From 187 to over 300 million. Income from operations, look, was negative 86 million. Now it's 22.4 million positive. So obviously that tax incentive or whatever it was definitely helped out the profitability side. But again, as we saw, even without it, the company had a stellar quarter. New product offerings, subscriber growth. Online revenue increased by 79%. Wholesale revenue also saw a 28% increase. Yep. Average revenue grew. Net orders and average order value. Net orders increased by 20%. Average order value saw a significant increase of 48% to $147. Wow. New product launches. Launched after September 30th. Investments in expanding current facilities, enhancing manufacturing, including affiliated pharmacies, warehousing facilities, are ongoing and expected to continue for at least the next 12 months. Okay, so it looks like we may continue to grow and be on the up and up. However, if these investments now start to bear fruits over the next 12 to 18 months from now, we may see, well, by that time, they'll probably be at high 4, maybe low 500 million, but you may immediately see the jump to the next milestone up to like 650, 700 million all of a sudden for the quarter. You understand what I'm saying? Because, again, they're increasing the efficiency, the operating capabilities. So, we'll see. Only time will tell. The company plans to continue investing, in health and wellness specialties. Several strategic initiatives, Medisource RX, compounding outsourcing facility for 31 million. It already paid off probably to enhance its compounding capabilities and market presence. Continued investments in marketing to acquire new customers. Acquiring financial investments in additional headcount, marketing, operational capabilities, and inventory purchases. Company completed the 2023 share repurchase program, repurchasing and retiring over 3.6 million shares of Class A common stock for roughly 48 million. A new 2024 share repurchase program was authorized, allowing repurchase of up to $100 million of Class A common stock, with $30 million already utilized. So last year, 48 million. This year, 100 million. So we doubled the share repurchase year over year from 23 to 24. Company plans, subject to market conditions, faces several challenges. Company's limited operating history and evolving business make it difficult to evaluate its current business and future prospects. See, that's why it makes me laugh sometimes, right? Because we'll look at multiple businesses and it's like some companies get like pre-value as we talk about. And now, something like HIMS that technically is growing nicely is probably, in my opinion, one you'd want to own for the next couple of years unless the popularity and the numbers change. But, again, they always have to throw in, there's a difficult business model to, maintain its current valuation. Really? Like none of these other trending stocks that we talk about have these issues, but HIMS and Hers has an issue. That's what I mean. That's why I like to look through some of these articles and I mentioned some headlines and some specific terminology in regards to the kind of company and based off of what they're saying, based off of recent news, right? So that's why something like this makes me laugh. It, in my opinion, makes me like it even more. That we just went through phenomenal numbers on a phenomenal quarter, but you're trying to downplay this company. The company's results of operations and key metrics may fluctuate on a quarterly and annual basis. Every business fluctuates, potentially failing to meet investor expectations. Yeah, okay. I mean, again, you could say the same thing with Palantir. Oh, they've been on the up and up, but, it could fluctuate and they can miss next quarter. It's like, what the hell? What does that statement even mean? Inability to expand or maintain the scope of its offerings could materially and adversely affect its business. Yeah, I don't know if there's much inability, being that revenue subs are chunking up like crazy and they just beefed up guidance moving forward, but now all of a sudden it's going to be, there's going to be inability to expand or maintain. Like, come on. Challenges in successfully marketing to new customers and retaining existing ones could harm the company's business. Well, all of those metrics are on the up and up, so that shouldn't be mentioned. Intense competition from large, well-established healthcare providers and tech companies may impact the company's ability to compete effectively. Well, so far so good. I don't see any issues. The company's success is heavily reliant on maintaining, promoting, and enhancing its brand, which it's doing. The business could be materially and adversely affected if the affiliated medical groups are unable to attract and retain high-quality providers. It'll only be an issue when it's an issue, I guess. The company's pharmacy business subjects it to additional healthcare laws and regulations, increasing the complexity and extent of compliance obligations. I'm sure they hired a bunch of people to make sure, they stayed inside the lines and didn't cross any red tape. Non-compliant, but then again, who knows? Maybe Hindenburg will come out and try to talk about, how they're trying to save the day on this one as well. Who knows? Non-compliance with healthcare and other laws could result in substantial penalties. Yeah, like, we know. What the heck are we doing here? What the heck are we doing? Are we, like, going back to the prospectus and, like, restating all potential risks that can come with a publicly traded company? Like, what the heck are we talking about here? Security breaches and loss of data could compromise sensitive information and adversely affect the company's business and reputation. Well, chances are they didn't design the security system. I love when people always say that. And again, I'm talking in general here with these companies. They could get breached. Yeah, all right. So who's really responsible though if they get breached, right? Because they probably hired someone else to do the security of the data. So, just because they were targeted as a company, they're the ones who were negatively affected. I don't know. Going off on a tangent. Company is subject to legal proceedings. I don't even think I want to continue reading this. Company may require additional capital to support business growth. All right. Company's dual-class common stock structure concentrates voting power, limiting investors' ability to influence important transactions. Well, all the important numbers, like seeing the number of subscribers grow, seeing the revenue grow, increasing guidance, now swinging to profitability and looking to maintain profitability. So all of the important issues are being taken care of. So the market price of a company's Class A common stock may be volatile. COVID, mobile experience, global supply chain. I just want to double check and just make sure we didn't miss anything. Adjusted EBITDA for the quarter was $51 million, up from $12.3 this time last year. Gross margin decreased slightly. Maybe that's why it popped and then dropped and then decided to go back up. Because that's what I mean. They'll try to hang on to any negative to hinder a stock's growth, but these numbers, just absolutely massive. Yeah, we increased guidance. Yep. And let's check it on stock charts real quick. I'll let you go. So in my opinion, yeah, this is, I used to say, I said probably a $20, $25 stock longer term. I remember several months back. I think it was like 6 months ago in May. And again, the company, the numbers have been on the up and up, and then they got involved with the weight loss drugs, and it instantly exploded to 25. So we hit that long-term target just within, a couple of months after we first looked at it. So based on this growth, honestly, and future guidance, we crunched the numbers last time. We can easily bring this market cap up to $6-7 billion. And as much as you might want to hate it, just remember the precious ASTS is still maintaining a $7 billion market cap. And HIMS is actually growing like an animal. So That's why, again, I'll always try to make the comparison to a trending stock. You know, if ASTS is worth 7 billion in its current state, then HIMS, by your logic, is worth 10, 12 billion. I mean, that's shouldn't even be a question. So, um, realistically, I'd say 30 is possible. Realistically, I'd say 30 is possible. Longer term, again, I don't know exactly what's going to happen, when and what is going to be announced on the stock that will make it pop and drop. But realistically, in the numbers, based off the growth I'm seeing, this is probably going to be a $40, $50 stock, in my opinion. That's just me. Again, that'll bring the market cap up to, 8.5, 9 billion. That's still not too crazy, honestly, for the rate at which they're growing. But, yeah, stock chart, sorry. So, wait, we're up to 22 after hours. We had a resistance level right here. Previous resistance level last month, right here at 22. Stock right now at 22. But we did go up to 22.65. So we technically didn't hit this resistance yet of 23.03. So in my opinion, that should be coming, and we should continue to step up and up. 27, 23 really should be the next stop, in my opinion. The MACD was slipping. It got quiet recently and then had a nice bounce and started to climb going into earnings. And of course, they beat. RSI was middle of the road. That'll probably be near the benchmark tomorrow at the open. On the weekly, we still have more room to go, even though it does kind of look like we have a potential like head and shoulders pattern here, right? So we could see a drop back here. Who knows? Maybe to the mid-teens. But, I mean, in my opinion, we just went over all those numbers and they look pretty good. So if I like it here at 20 and 22 and it drops back to 15, in my eyes, I would view that, I would say thank you. But we'll see. We'll see how it performs. It, again, on a miss, it may have dropped down here, completed the second shoulder, and then caused the big break down to, 12 or single digits. But they technically beat earnings again, so it should be on the up and up. MACD recently crossed to the upside here back in October, and we were up again, had that pullback, and now tried to climb into earnings. Boom. So we should technically continue this trend up and up, which is why I think like 25, 26, 27 really should be coming, in my opinion. But, yeah, HIMS long term, I personally really like it. I really like it long term, and they've been delivering. They've been delivering. So that's pretty much it. I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.